Hi everyone, this is Molly with Husky Homes, and I'm joined today with Dave Grauwels, Guild Mortgage, and we are going to be chit-chatting about what it looks like right now in this current market to buy a house and our lending 101. So Dave, take it away.
I'm Dave Grauwels with Guild Mortgage in Madison and been lending for about 19 years. Just kind of wanted to talk through a little bit of a few things. Molly, what questions do you have for me? What do you usually hear from clients that people might find this information helpful when going to buy a home?
Yeah, so I work a lot with first-time home buyers who feel at some point that they want to buy a house and they just don't know where to get started. So generally, we take them through the buyer consult, and then I send them over to a lender. So when we do that, how does that work on your end? How once we give that introduction to you?
So what would happen is when you connect us with a potential buyer, Charla on my team would reach out and she would start the loan application process. She would help them go through that either with the online application or they could do it over the phone. Then once that's completed, we would pull credit. We would send over a secure portal so that they can upload documents. And then once we have those documents back, we would schedule a Zoom pre-approval meeting. And the reason that we have them send over documents is we want to make sure to make good use of their time when they do call in to talk through the pre-approval. I don't want to speak in generalities. We want to speak very specific to their situation. So if we have all of their information, that makes it very easy to do. If we have their credit, we know their liabilities, we know their assets, we know their income. Well, now we can really do a great job of advising them on different programs that are available to them.
And what kind of documents do they need?
The most common documentation is 2 years of taxes, 2 years of W-2s if they're W-2'd. If they're not, if they have 2 years of business tax returns and K-1s. And then we'll also need 60 days of bank statements, 30 days of pay stubs. So pretty straightforward stuff, things that most people would anticipate. We basically want to know where's the down payment coming from and how much should they make, so we can calculate a debt ratio.
Okay. And so what can you tell me in terms of a pre-approval versus a pre-qualification? How do buyers go about getting one or the other, and which one is better?
It's a great question, Molly. So the difference is a pre-qualification. That's if you completed an online application, sent over that maybe pulled credit, maybe not, should have pulled credit at least, but we don't have any of the supporting documentation. That's a pre-qualification. When it becomes a pre-approval, that means we've actually evaluated your documentation, and now you are pre-approved to go buy a home. We do have one other level to that too. There's an approval now called a TBD, which is just to be determined. So basically, for that type of approval, we would take it a step further, and we would send all that information and documentation to the underwriter even before you have an accepted offer. So let's say that your maximum purchase price, my team determines it's $300,000. We'll send it to an underwriter, assuming a $300,000 purchase price. And the reason you'd want to do that is that's taking it even a step further in this competitive market. So if you have that TBD, that's stating that all we need at that point is an appraisal and we need title work. Well, everybody that closes on a loan, or even without a loan, anybody that buys a house needs title work to make sure the title is clear and to be able to transfer title. So the only difference is in some cases we need an appraisal. In some cases we don't even need that. We may get a property inspection waiver and then we don't need the appraisal. So the benefit of that, let's say you're putting down 5%. And in this competitive market, you might be going against somebody that's putting 20% down or is putting cash down. And people, if you're the seller, you would anticipate that that's a stronger offer if it comes in at cash. But now, if I can call the listing agent and say, this approval is different. We need title work and we need appraisal and we can close. That's it. Everything else has been fully underwritten. Now you should be able to go head to head with even a cash offer, because at the end of the day, even a cash offer, they're leaving with a cashier's check, now the suitcase of hundreds, right? So as long as we know we can fund the deal, it should be a level playing field. So our company has chosen to do that, which requires a lot more time out of the underwriters, but it puts people in such a better position that we've made that commitment to doing that.
Interesting. So you had mentioned an appraisal. So can
Yes.
you tell us what an appraisal is versus what people may hear as an assessment, and why you need an appraisal?
So an appraisal is done by an independent third party and it's used to determine value. So basically when you run a CMA, a current market analysis, and say, here's why this house is priced at 250 because there's 3 or 4 other houses very similar to it that sold for 250. That's what an appraiser does, is they use that same data that you access and they go in and put a report together. And the report is designed to protect us and how much we're lending, us being Guild Mortgage or any lender for that matter.
Mhm.
And it's also used to protect the person buying. They want to make sure that it's in line with what they should be paying, that the value is accurate compared to what they're paying.
Okay.
Different in an assessment, that's something that the city does to determine how much you pay in taxes. So one has nothing to do with the other. People do look at assessed value and say, well, if it's, how come they have a $250,000 assessment and they're listed for $299? That's different. That's what the city's assessing them for related to taxes. This is what's the current value, because that's so actively changing, particularly in this market.
And there is something to be said for that with the assessments as well, because once you purchase the house, and let's say your assessment at the point that you buy the house is at 250, and
Mm-hmm.
you're writing the offer at 285, and it gets accepted at 285, that following year, your assessment's going to jump to your current market price, which
Most
is
likely, right?
paid for the house. So when determining your monthly payment for your house, you need to take that into account, that the following year, your all-in monthly payment is most likely going to be higher because of that assessment jumping up.
Yeah, if it was under assessed, I would agree with you. That's pretty likely.
Right. And so me as a buyer's agent, I always talk to my buyers about that, and just make them aware that your difference between your assessment and the purchase price of the house is about let's say it's a $40,000 difference. The current mill rate for the year is going to change a little bit, and then your taxes are going to be higher. So we kind of figured that out. That's the good thing about having a competent buyer's agent, to make you realize that your monthly payment per month is going to go up the following year.
Yeah, it's a good exercise to go through for sure.
Mm-hmm. So, all right, we've determined that we can get pre-approved for a loan, and let's say we're pre-approved for $300,000. And I decide as a buyer that I'm only comfortable paying $1,400 a month. Do you, as a lender, are you willing to talk me through what a $1,400 a month payment all in looks like? Or do you just give me that pre-approval for $300,000 and throw me out to the wolves?
No, of course, we would always talk through, we tell somebody what you could be approved for as a maximum, and then here's what you should spend. I mean, I'm never going to try to take somebody up to the top of their price point unless that's something that they absolutely want to do, because you don't want to have anybody, being house poor. So then we just work through it. When we talk through it in a pre-approval, we run numbers and we talk through scenarios. If you tell me that you want a $1,400 payment and you're going to put 10% down when you go to purchase the property, then my team's going to calculate the 10% down, the current market interest rate, and then they're going to factor in, take an average mill rate times an average purchase price, figure in some taxes, figure in about $80 a month for homeowners insurance if it's a house, $30 a month if it's a condo, put that all together and say, we can get really close here, probably within about $50. Keeping in mind rates change, keeping in mind that if you looked at 5 properties that were all priced at $250,000, they would all have a different tax amount potentially. Mm-hmm. So we try to get that number as close as we can. Again, not an exact science, but we can get real close.
Well, that's wonderful. Okay, so here's the big question. I don't have 20% down to buy a house. However, I may have 3% down or no money down. I don't have any money to put towards a down payment. Can I still buy a house?
You can. And there's actually 3 different 100% programs right now. The first one is WIDA, And that is set up as a 97% one loan and then a 3% second mortgage. So it's in two separate mortgages, but you do still get 100% of the down payment. Not of the down payment, 100% financing rather. It just happens to come in two separate loans. The other option would be a USDA loan. That has to be a rural property in smaller communities. And that is 100% all in one loan. And then the third 100% financing option is a VA loan. So if you've served in the military and you're VA eligible, then that's a third potential option. Obviously, if you haven't served in the military, then that's not an option. But if that's something that I will tell you with WIDA, they have income limits depending on county, and it's household income. So if you have, let's just say that you and your spouse work, and then you also have an 18-year-old kid that works at Subway but still lives at home as a senior in high school, they would do entire household income. So the 18-year-old kid's income would go in there as well. Mm-hmm. That's where it's really critical to make sure you go through the pre-approval process to provide all your documentation to make sure that you don't write thinking, I can do this WIDA loan and I can do it at 100%, and then find out that you actually can't because you're over the income limits. But if you fit in that box, there's absolutely 100% option. The USDA, if you're looking in the smaller communities and the property is eligible and your income doesn't go over the limits for USDA, that's also an option. But even if, let's just say none of those work and you can't do a VA loan, you could do a 3% down loan. That's absolutely still an option. You could do a 5% down loan. 3% has some income restrictions as well. But certainly still a viable option for most people, particularly if you're a first-time buyer. That could be a great option as well. You could do as little as 5%, 10%, any increment that you'd like, as long as you can qualify for a program like a 3% down. Any increment above that, you can still certainly do.
Okay. And I've heard before the term private mortgage insurance, or PMI. Is that factored in with those loan programs, or when don't I have to have PMI?
So if you put down, PMI stands for private mortgage insurance, and it's exactly what it sounds like. So if you put less than 20% down, a lender requires that you have that insurance to protect them. So let's say you put 3% down, you're insuring that 17% in between. And the way that insurance is determined, it's on a private insurance market where it would be priced based on your credit score and your debt to income. So let's say that your credit score is a 650, your PMI is going to be higher than somebody with a 750 credit score or an 850 credit score. So what they're doing is very much like car insurance. If I have 2 speeding tickets and I blew a red light and you have a perfect driving record, your car insurance is going to be less than mine. PMI is the same way. So if you have good credit, it really helps and keep the payment down. There's also options where you can buy out the mortgage insurance, where you can pay a one-time fee, and for the life of the loan, you don't have private mortgage insurance. I really like that option in a low rate environment like now. Let's say you could lock in a rate of 3.25%, and you could buy out the mortgage insurance for the life of the loan. Now you're pretty much set. I mean, I can't see a scenario where you get a whole heck of a lot less than 3.25%. So your loan's in really great shape at that point, and there'd be highly unlikely you'd refinance in the future.
Yeah, I mean, money is basically free right now, and
yeah.
Why wouldn't you take this opportunity to buy a house? You think about 10 years ago when interest rates were 8-10%. Now is the time. And if you can finagle your way into getting a loan, getting a house, and figure out your finances now, you will be in great shape for the future.
I totally agree. I mean, rates are really close to a historic low. So if you can lock in a great interest rate, a really low payment, keep in mind, let's say your rate was 3.25%, you still write off the interest and you write off the taxes. So the net effect that has is that money is somewhere in the twos that you're actually borrowing after you take that write-off on your taxes. So it's a pretty awesome time to buy, no doubt about it.
Yeah. And right now, you may hear that we've got really low inventory, and that's true. It would be nice if more sellers would sell their houses. But
I agree.
I think having again a competent buyer's agent who is willing to look at property with you and find just the right house and write those letters to sellers who may not even have an idea that they're ready to sell, but and don't know that there's buyers out there in their market. Take that opportunity and run with it, and let's find you a house.
For sure. So in this market, Molly, with this COVID stuff going on,
yeah,
you still seeing multiple offers? Are you still, talk to me a little bit about how you guys what you're seeing and how you're combating this current market?
Yeah, so not a lot has changed. We are still writing offers. We're still going and showing houses. We are taking more precautions than ever, and we're making sure what I call is the 3-step process. So we're taking you through all of the houses before you've even walked into the house.
So virtually, you mean you're doing a virtual
very
tour of all of them?
virtual. So I'll send you the link to the listing. You'll look at the pictures and say, hey, I do like this house. And the second thing I will do is I will send you the virtual tour. And if you still like what you see, then I will take you through the house. And that is for 2 reasons. It's to keep you safe and it's to keep the seller safe. And I would never want something bad to happen to either 2 of you. And so the biggest thing right now is just safety. And I don't know if that's ever going to change. I think we've gotten into this new normalcy where everything is very, very virtual. And people are accepting the fact that they get to look at a house online before they've even stepped foot in it. And most of the time, people are buying or writing offers without even seeing them.
Without physically going into the house.
Yeah, and we're lucky here in Wisconsin because we have a little bit more leniency in our government when it comes to real estate being an essential part of the COVID pandemic. So we are still able to look at houses, unlike places like Michigan, where the only time that they can look at a house is once they've gotten an accepted offer.
Wow. Yeah, that would change the game for sure. So when you mentioned that you'd send these pictures over and then eventually virtual tour, how do you determine what houses you send to a buyer? Somebody, if I wanted to work with you, what does that process look like?
Yeah, so the first thing would be you raising your hand and saying, hey, I want to buy a house. Then I do what Dave and I are doing right now, and we'll have a virtual phone conversation face to face. And I'm going to take you through a needs analysis. We're going to look at what type of house you want, where you're looking, what are your must-haves, what are your absolutely cannot haves. We'll look at the price point and the location of the house that you are looking to buy or what you want to buy. And then we're going to dive in and say, when's the perfect time for you to buy? Do you have a lease that you're currently in? Are you ready to move out of mom and dad's basement? What does that look like? And once we find that out, then I put you on what we call a collaboration center. Once we've dived into your must-haves, and I start sending you those properties based off of the 45-minute conversation that we have.
Excellent. So what's the biggest challenges that buyers face right now?
Right now, it is the low inventory. Depending on their purchase price, it is how many houses there are and how many other buyers there are in the market. So if we have, let's say we have one house, I'm dealing with this daily with multiple buyers. We've got one house, it hits the market on Thursday, and there are multiple showings the first and second day. And by that first day, they probably have 2, 3, 4 offers. However, they end up holding them sometimes until Monday. And by that time, there's 13 offers. So instead of competing against one other person or not competing at all, we're seeing a big boom of offers. So I'm usually competing with our buyers on 13 different offers, between 1 and 13. So
what do you do for something like that to stand out? How do you How do you make
It's creating a creating a really good relationship with the real estate agent on the other side. It's writing offers with as little contingencies as possible, having our lender give a call to the seller's agent and make sure that they know that our buyer is rearing and ready to go and they are financially stable. And we're writing really good buyer letters. So those buyer love letters to the seller, we make sure that we can find some sort of a connection while you're walking through that house. And then you just kind of pour your heart and soul into 2 or 3 paragraphs on why you love the house. And quite frankly, the buyer love letter will push you over the edge every time. You wouldn't think so, but I mean, it's an emotional process for everyone. And if you can gain a little bit of tug on those heartstrings of the sellers, it does it.
Yeah. How are home inspections being conducted right now? Do they still go and, do it all in person and go through everything?
Yeah, so we're still doing home inspections face to face. However, the inspector is going in, and generally it's a 2 to 3 hour process, and the inspectors are asking either the buyer to not come at all or come at the last 35 minutes with gloves and a mask and Clorox wipes, and making sure that they're not touching anything, but they'll take them through the house and let them know if there's any defects and what to look for. Especially if you're a first-time home buyer, you definitely want to know what it is that you're buying and have an understanding of the house.
So how do closings work in this environment? Normally you go to a title company and the seller's there, the buyer's there, they all sign their documentation. What does that look like now?
Yeah, times have definitely changed. They are doing drive-through title closings. So over at our title company, Homestead Title, they have a couple parking lots or parking stalls that you just drive into. Give them a call and let them know that you're out there, and they just do the signing at the car. So our closers are all garbed up and making sure that they're safe, and they stand about 6 feet away, and no one ever sees each other. Usually it's me giving a call after they're done closing and saying, congratulations, you've closed on your house. There's a gift at your front door. And it takes a little bit of the fun out, but it's a fun thing regardless.
Certainly a different world, no question about that.
It is.
The intent of this was to get people a little bit of a taste for the lending and the buying side. Certainly, feel free to reach out to us so we can get more detailed information to you, talk through your specific scenario. Everybody has a different scenario. Everybody, different credit scores, different programs for different credit scores. There's a lot of different factors that come into play, but certainly we can, if we work together, we can get it all figured out.
And we are here to help answer any questions that you may have. Again, I'm Molly with Husky Homes, and this is Dave Grauwels with Guild Mortgage, and we are so excited to be able to help you during this time and any other time in the future.
Thanks, Molly.
Thank you.